In today's swiftly changing financial landscape, are you equipped to make informed investment decisions?
Absolutely. Leading analysts like Joseph Wang, Emily Brown, and Danielle Park have distilled their wisdom into essential insights just for you.
We've harnessed the power of artificial intelligence to condense their analyses into just a few minutes, saving you time without sacrificing understanding.
Let's kick things off with Joseph Wang as he shares why rising Treasury yields might lead to major pullbacks in the market.
And stay tuned. Emily Brown and Danielle Park will unveil their strategies for navigating this tightening market.
Before we dive in, remember that this video is for educational purposes. Always conduct your own research.
Welcome to this week's review, where we delve deep into insights provided by Joseph Wang.
Joseph focuses on rising Treasury yields and their impact on equity markets.
Joseph Wang points out that equities could face significant pullbacks, especially with rising yields.
He notes that investor sentiment is growing increasingly cautious in response to these market changes.
How does Joseph explain the pressures from rising Treasury yields?
Joseph states that rising yields lead to higher borrowing costs, which negatively affect risk assets like equities.
What does Joseph say about current market volatility?
Joseph explains that increased volatility is causing fear in the market, prompting investors to seek safer investments.
What predictions does Joseph Wang make for the upcoming year?
He forecasts possible market corrections in 2026 and advises investors to exercise caution.
What does Joseph predict for the market in 2026?
Joseph anticipates further volatility, indicating that market corrections might occur throughout the year.
In conclusion, Joseph stresses the importance of closely monitoring Treasury yields.
He also suggests diversifying into more defensive assets to mitigate risks.
Today, we're diving into the analysis provided by Emily Brown regarding the challenges equity markets may face in 2025.
Emily emphasizes the need for caution, specifically pointing to rising yields and bearish patterns as significant risks.
Emily suggests that indices may be overvalued, indicating that a significant correction could be forthcoming.
David Lynn notes that this perspective aligns with the volatility observed recently.
How does Emily Brown explain the ramifications of rising Treasury yields?
Emily indicates that as yields climb, borrowing costs increase, creating pressure on risk assets like stocks.
What bearish signals does Emily refer to in the indices?
Emily highlights indicators in both the S&P 500 and NASDAQ suggesting a downturn might be approaching.
What correction does Emily Brown forecast for the markets?
Emily anticipates a pullback between 15 to 25%, along with ongoing volatility.
Emily provides actionable insights for investors. What should they focus on?
Emily recommends that investors keep an eye on Treasury yields and analyze their impact on equities.
In conclusion, Emily Brown stresses the importance of a cautious and strategic approach to the market.
Investors should reassess their strategies, paying close attention to economic signals and technical trends.
We're looking at Danielle Park's insights on the challenging investment landscape ahead.
She emphasizes the need for investors to be prepared as trends indicate potential losses.
Danielle contends that current market conditions could lead to substantial losses.
She highlights the importance of understanding this changing economic landscape.
What does Danielle say about current investor sentiment?
She suggests that many investors are underestimating risks and might react emotionally during downturns.
What predictions does Danielle Park have for the markets?
She expects a market correction and a potential increase in volatility, urging investors to prepare accordingly.
What losses does Danielle predict for investors in the short term?
She anticipates that many investors could see losses of 10 to 20% if current trends continue.
Danielle stresses the necessity for investors to reassess their approaches in light of current market conditions.
She advises that investors remain vigilant and consider more secure investment options to navigate volatility.
Today, we are reviewing Japan's intriguing economic developments with our guest expert.
The analysis reveals crucial factors that may influence global financial markets.
The guest emphasizes noticeable fluctuations in Japan's GDP growth.
They highlight rising inflation rates and their impact on consumer purchasing power. According to the expert, fluctuating GDP growth reflects broader economic uncertainties.
This leads to varying consumer spending patterns and a lack of confidence. The analysis stresses that inflation significantly erodes consumer purchasing power.
Higher costs are forcing consumers to adjust their spending habits. The guest predicts that inflation may stabilize, but remain above target rates for a while.
There's a need for reevaluation of economic strategies to manage these changes. The economic analyst predicts inflation may stabilize near upper limits within the next year.
They stress that effective economic policies will be essential for managing inflation.
In conclusion, our analysis highlights the need for strategic budgeting due to rising inflation.
Investors are encouraged to diversify into resilient sectors to buffer against instability.
Today, we're looking into Keith's thoughts on the alarming rise in mortgage delinquencies and its implications.
Keith highlights how rising household debt is a crucial factor for economic stability.
Keith notes that mortgage delinquencies are on the rise. It's a warning for homeowners.
This trend signals increased financial stress for many, reminiscent of past economic downturns.
Keith mentions that household debt levels are soaring, which raises alarms.
Historically, excessive debt has often resulted in economic crises, particularly when repayment becomes a challenge. Keith draws parallels with past debt surges that have precipitated crashes.
Evaluating these historical contexts shows signs of concern in today's market. Keith advises homeowners to remain vigilant amidst rising delinquency rates.
Financial prudence is increasingly crucial for homeowners to avoid pitfalls.
What concerns does Keith have regarding current trends?
Keith warns of potential financial crises if defaults continue to surge, impacting the fragile market.
In conclusion, Keith underscores the need to follow mortgage trends and economic signals.
Proactively managing debt is essential for homeowners to navigate these challenging times.
Today, we're discussing an important analysis by economist Steve Hanke regarding the state of inflation and market bubble risks with David Lin.
Steve's insights reveal concerning trends and their implications for the economy.
Steve Hanke argues that current inflation levels are dangerously high and cannot be maintained.
David Lin emphasizes that these inflationary trends may indicate wider economic instability. Steve expresses concern that inflated valuations across various sectors may imply an impending market bubble.
Many investors are indeed feeling apprehensive about possible corrections to the market. Steve emphasizes the crucial role of central banks in combating the inflation crisis.
David adds that the actions taken by these monetary authorities will substantially affect both national and international markets. What does Steve anticipate regarding inflation as we move ahead?
Steve forecasts persistently elevated inflation, which may significantly alter consumer spending patterns. Steve suggests that in a best-case scenario, effective policies could lead to a stabilization of inflation.
However, if current trends persist without intervention, we risk facing a serious economic decline.
Steve advises investors to monitor crucial inflation indicators to guide their investment strategies.
Additionally, it is essential for policymakers to take vigorous measures to control inflation and maintain economic stability.
What a whirlwind of insights we've just witnessed.
Absolutely. Each expert brought something vital to the discussion, from Steve Hanke's warnings about inflation to Keith's concerns about household debt.
And let's not forget the analysis of Japan's economic trends, which really broadened our understanding of global factors.
True, and Danielle Park stressed the need for investor caution amid changing market dynamics.
Yet, there's an interesting split on how quickly we might see a market correction. Emily Brown's predictions were quite eye-opening.
She certainly raised an important point about monitoring those market patterns closely.
If today's discussion sparked your interest, make sure to like and subscribe.
Your support helps us continue to bring valuable insights from top experts right to your screen.
And stay tuned for our next video where we dive deeper into the complexities of global markets and trade.
You definitely won't want to miss it. See you next time.